Hi, guys. Welcome to the How I Raise It podcast, produced by Foundersuite.com and Fundingstack.com. This is the show where you get an inside look at how real entrepreneurs and VCs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Noah Helman of Industrial Microbes, a startup using fermentation technology to replace chemicals that traditionally come from oil. It's pretty interesting stuff. In this episode, we talk about how to secure initial funding from the government, including government grants from sources such as the Department of Defense, National Science Foundation, SBIR, and others. Then we talk about raising a VC round from science and industrial-focused VCs. Not an easy task. We get into the details. If you're tuning into this podcast to learn how to raise capital for your business, be sure to check out Foundersuite.com if you're a startup, or Fundingstack.com if you are a VC or advisor. Both platforms will give you access to an awesome collection of tools for raising capital, including a massive investor database, a CRM to manage your raise, a virtual data room to run due diligence, plus pitch deck hosting, investor updates, email tools, and much more. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Noah.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com and Fundingstack.com. Today I have Noah Helman of Industrial Microbes coming to us from the island of Alameda. How's your day going?
It's going great, thanks. How are things with you?
Pretty good, pretty good. Let's get into it. What is Industrial Microbes?
Industrial Microbes is a biotech startup focused on making chemicals and materials more sustainable. So the materials that we use every day in our lives, most of them are synthetic materials that come from ultimately a barrel of oil that's drilled out of the ground. And I think we all probably know that that is not a sustainable solution forever. And due to climate change, we need to be transitioning to a more renewable source for that, what we call feedstock in the industry. We need to be able to build things out of renewable feedstock. And so that's what we've been working on over the last several years. We do it using technology that is based on fermentation, which is probably familiar to most people if you have ever had a beer. In that case, you've got a big tank, you put in sugar and yeast and you make beer. But in our case, we have a team of scientists and engineers who remodel the metabolism of a microorganism so we can feed it something renewable and make chemicals or materials directly in that process.
Hey, so what goes in to the vat and then what comes out?
So yeah, in our case, we're starting with ethanol, which again, you probably know from beer or wine or whatever. And that is a product that we also have in our gasoline here in the US. It's tend to be blended at about 10% of our gasoline is ethanol. So there's already a huge industry built up around that in terms of infrastructure, manufacture and transport. So we can use that as the feedstock or the raw material in our process. And then the first products that we're going to make are going into actually a wide variety of different end applications. So we're making two products at the beginning. One is called acrylic acid, which if you've ever used acrylic paints, that's one of the main applications. But it's also used to make diapers, coatings, adhesives, cosmetics, things that go into cleaning agents. It's really a very widely used molecule. And the second thing that we're making goes into making plastics and carbon fiber for applications, high-end bicycles and skis, all the way up to aerospace, like making vehicles and satellites, drones, and aircraft.
Okay. I mean, is it as simple as saying using natural products instead of oil to create a new version of plastic and other chemicals? I mean, basically.
Yeah, it's got a pretty wide range of end uses, and that's by design. I would say from our company's perspective is we want to design one fermentation process or one bioprocess and be able to make many different products that end up transforming what's in our homes to be more sustainable across a range of end products.
Got it. And what you mentioned kind of redesigning the microbe, and what's the magic or science that you guys have done here to make this happen?
Yeah, the field is called metabolic engineering, and we probably all know that, if you eat too much sugar, your body will consume some of it for energy and create our body heat and the energy that we use to run around and do sports. But it also, if you have too much of it, can redirect that into fat that accumulates in our bellies, in my case. And a microorganism has a similar set of pathways that it uses to turn its food into the molecules that it needs to survive and multiply. And so our team are a series of scientists and engineers who work on engineering those metabolic pathways so that when we turn them on, let's say, it redirects the raw material, in this case ethanol, into the product that we're trying to make at a very high efficiency.
How did you redesign the microbe? Or, that's these might be dumb questions, but like, what does that mean?
No, it's not a dumb question. Yeah. I mean, it's I think commonly it's probably easiest to explain it as genetic engineering, right? So the metabolic pathways are all mediated by proteins in our cells, and by turning on and off the right pathways, or turning on and off those proteins and making them show up at the right time and be efficient, then the molecules that we're trying to make get produced, and the molecules we're trying not to make get shut down.
Gotcha. Interesting. What's the backstory on this? Were you guys working together another biotech? Does this come out of academia or what?
My co-founders and I used to work at a different Bay Area startup called LS9. And for about 5 years, we were doing similar projects, engineering microorganisms to turn sugars into fuels and chemicals for applications like detergents and surfactants, lubricants, and other applications. One of the things that we saw there was you could develop a really great technology. I mean, we had scaled this up. We'd made metric tons of product at the efficiencies that were our technical targets. And we were really proud of ourselves. We were convinced that this was going to change the world, that we would have biofuels that were cost effective and were going to be in everybody's gas tanks. But it turned out that business took kind of an unfortunate turn, and the economics just didn't work out there, meaning the cost of the feedstock went up and the value of a barrel of oil came down, and it was no longer economical to do that process. So one of the main takeaways for us was, how do we build something where we can be cost competitive with the existing products today, while also having zero carbon emissions, while also starting from a bio-based source of raw material, and into what markets should we be looking to build and enter?
Gotcha. And that was sort of my next question is, where's this at in terms of production, and is it, cost competitive or cheaper? That'd be great, right? Or similar, or is it, take scaling up to get there? Like, kind of, where is this at in its market dynamic? Yeah.
Yeah, I mean, the markets that we're competing in have been established for decades and are at very large scale. So to give you an example, like in acrylic acid, anybody who's making a new acrylic acid plant today is building something that produces about 200,000 metric tons per year of that product. That's enormous, right? I mean, it's a huge chemical factory. For us to be cost competitive, we also will need to achieve very large scale due to the economics of getting up there. So at the moment, we're scaling that process. We've just recently done a pilot scale at a lab in Illinois, where we tested our process for the first time in a fermenter that's 1,500 liters. That's about 100 times larger than we can do in our lab in Alameda. And we saw very similar fermentation parameters there. So in other words, like, the process scaled up really nicely. In order to get to a world scale plant, we'll need to go up from 1,500 up to about 500,000 liters. So another factor of 100, roughly.
Yeah, interesting. Does, I know so little about this, and I got through science okay in high school, and that's about where my knowledge ends. But like the inputs, ethanol, isn't there sort of a dig on ethanol that it costs a lot of petrochemicals to produce ethanol from, corn and stuff like that? Like it's not a free input source. It's got its own sort of stigma, or am I completely wrong about that?
No, I mean, I think there are ways to do it well and ways to do it not very well. And one of the reasons why ethanol is a great feedstock for the chemical industry is it's possible to make it from a variety of different waste sources. And in addition to being able to use the traditional corn ethanol that, again, is about 10% of our gasoline. In the future, we will be getting ethanol from a variety of waste sources. Already today, it's possible to turn agricultural waste into ethanol. It's possible to turn municipal solid waste into ethanol. There's a Canadian company called Enerchem that's been doing that. There are a handful of companies already at very large scale turning industrial waste gases into ethanol, such as LanzaTech and Sonata Bio and a few others. And so we see ethanol as actually a great opportunity to start a business with corn ethanol as the immediate opportunity. And then as we shift to a more circular economy over the next decades, these other sources of ethanol will become available that are even more sustainable. And, by virtue of scale, again, will end up being lower cost.
That makes sense. That actually sort of answers the question, because I guess what I've read is, the ethanol that's in our gas tank is, there's some arguments about that, whether that's good or bad, because it takes a lot of energy and stuff to make it from corn. But yeah, if you're using municipal solid waste, literally turning shit into fuel, that's definitely appealing, right? Okay, and then methane, I guess also that's kind of got a stigma to it too, or just you hear articles about cows and the methane they produce and what that's doing to the environment. But where do you get methane?
So again, methane is similarly available from less renewable sources like natural gas, and also from a bunch of renewable sources, mainly from the degradation of organic waste. So that can be from landfills, as you mentioned. They produce methane from the food and other organic material that ends up generating methane in an environment that's lacking oxygen, like in a landfill. But it's also possible to take agricultural waste or wastewater and intentionally generate methane that you would capture and then turn that into a feedstock for making chemicals and fuels.
Interesting. How long is the timeline on all this? I know there's multiple factors, right? You've got to build the business, prove it, raise money to scale us a lot. But like, when could we be? It sounds like the magic really happens when you're at scale. What's the timeline of getting to scale?
Yeah, we're pursuing in parallel the optimization of the efficiency of the technology and the scale-up process, while we are also looking for partners who care about this because their customers care, and they've made corporate sustainability commitments to achieve net zero production. And most of those commitments are in the 2030s or later. But it takes a long time to actually get these to scale and to have a major impact like we aim to make. Our first plant will be up in about 2028. And that process is already being planned out right now, partly funded by a contract that we have actually with the Department of Defense, who recently has been one of the biggest supporters of domestic manufacturing for supply chains, especially in the chemicals and materials space.
Interesting. Will that be, I assume you're not building that in the Bay Area because it's just too damn expensive here, but where would you be locating that, just out of curiosity?
Part of the planning process involves a site selection, setting up site selection criteria. I would say our initial results are showing that it would be quite economically beneficial to integrate the fermentation step alongside an ethanol plant. There are some benefits to doing that, including being able to share utilities and taking heat that might be wasted in their facility and repurposing that for some of our needs. And being able to use ethanol coming out of their plant that isn't 100% pure or fuel grade ethanol, but actually a little bit lower grade and saving some of the costs there on their purification.
Okay, interesting. Cool stuff. I'm a fan of anything that I just hate plastic. I hate it. I could go on for an hour about that, but I'm a fan of anything that sort of replaces petroleum-based products in our environment. So cool to see what you're doing. Are there other companies doing this, or are you guys kind of unique in this little niche?
There's an industry of companies, large and all the way down to startups, working on trying to make more sustainable chemicals and materials for sure. I think a lot of people probably don't realize how diverse the chemical industry is and how much it touches all of our lives in so many different ways. So many startups pick different target molecules to go after. And there are different approaches that people take, that could be purely chemical or biological, or in our case, a mix of a biological process with a chemical process. So yeah, it's an area that a lot of people are focusing on because the recognition that the chemical industry represents 6% of global greenhouse emissions. And it's going to be a difficult task to completely bring that down to zero. And we're going to need a lot of innovation and a lot of commitment and a lot of encouragement from the end consumer, showing the companies in the value chain that we need to make a change here.
Yeah, interesting. If people are listening to this or are interested in this space in general, I'll make a quick plug. We had a while ago on our podcast, the founder or CEO of UBQ Materials, which is a clean tech company that was converting unsorted household waste into thermoplastic composite. I thought that was kind of cool because it was like the visual was very cool. It's like your dirty diapers plus your apple rinds plus all the other crap goes in. Out comes a plastic, alternative. I thought it was kind of neat. So anyway, glad to see people are tackling these issues. Yeah, very good. So let's talk about raising capital for this. How did you guys, you left LS9, and is LS9 still going, or did that shutter, or what?
Around the time that we left, it was acquired, and then that asset was actually acquired a second time, sold to a different company, and it is being commercialized now. Actually, that technology that we worked on under a collaboration between some major companies. So yeah, we're proud of that work. I'm glad to see that it's eventually going to get commercialized. Yeah, I think it's an interesting lesson that sometimes things come back from the edge to have an impact.
So you guys, you go off, you form this. How do you fundraise this? I mean, I'm assuming over the long term, this is a massive amount of money that needs to go into this, right? Correct me if I'm wrong about that, but how'd you guys get, started? Did you angel fund, bootstrap? Can you even bootstrap something like this? What was the sort of initial financing to get going? And then we'll get to the recent round. But yeah, how'd you get going?
We started out mostly applying for government funding. And I think there's a lot to be said there for how valuable the support of governments can be for these kinds of early stage, deep tech companies. Our first grant actually came from, believe it or not, the government of Alberta in Canada, trying to reduce emissions and find technologies that could do exactly what we ended up working on, right? Which is using wastes and making products that otherwise would be made in less sustainable ways. But from there, we were able to get into Y Combinator and got a few more grants. We were able to raise some funding coming out of YC and met some great early investors who saw our vision and wanted to support us. Yeah, that was the initial year or so of getting launched there.
Can you give a mini tutorial? I know literally zero about grants and how to get grants. If you were coaching, mentoring a, material science entrepreneur, how could you coach them in getting started? Grants, finding grants, how to figure out which ones are right for you, application processes. Can you give us just a mini tutorial on grants?
Yeah, absolutely. I should add that most of that work inside our company is done by my co-founder Derek Greenfield, who's really become our leader on that and our master of that process. So I'll do my best to summarize what I feel like we've learned. At least here in the U.S., I'll focus only on that because I think that's where we have the most experience. There are many different agencies with, in some cases, specific mandates or goals of what they want to fund. And those decisions, they're made by individuals or sometimes groups of individuals, but it can be very valuable to understand what it is that they're looking for by trying to contact them directly, program managers or folks who are inside Department of Energy or ARPA-E or DoD, or even the Army Research Lab has funding, and NSF, EPA. We've gotten funding from, I don't know, at least half a dozen different agencies. In some cases, it's very obvious what it is that they're looking for because they'll put out a call and say, in June, we're going to ask for applications on these 5 topics. Before the applications open, it is sometimes possible to contact the program managers, and in other cases, it's not so easy to find them. Usually, once the applications are officially open, then they're not allowed to talk to anybody anymore through the end of that process. I think it's generally helpful to understand, like, the size of the grant and whether they're looking for technologies at a certain readiness level. It is a lot of work to apply for these government funding agencies, and not just the application, but the administration and interactions with the folks on the government side. We've mostly had incredibly good people to work with on the government side. I know sometimes people don't love talking about government and private industry, but we've had really great support and very smart people who earnestly want to help us be successful. I'd say the main drawback is that some agencies, there can be a long period of time between when you hear about the opportunity, apply for it, eventually receive the funding, and then sometimes there's a second phase that can become available that might be like a larger amount of money, especially with the SBIR process. And there's often a gap between the first phase and the second phase, which can be difficult to bridge for startups. So I would say trying to mix government support with private investment has been really critical for us so that we can bridge those gaps and show investors that we're able to leverage every dollar that they give us has basically been leveraged, by a dollar from the government.
Yeah, it's interesting. I'm going to, a couple more questions about grants, we'll move on, but how do you find them? Is there a universal directory or marketplace of all these grants, or do you literally have to go to National Science Foundation and DoD, Department of Defense, and other websites to find these? Is there any aggregation of all these grants?
Not as far as I know. I know that we get on mailing lists, and there are ways in which the agencies will push out that kind of information, but I don't know that there's like a single central repository for every opportunity.
Right. Okay. So kind of figuring out government agencies in your general space and then going on their websites and looking for the right grants.
Yeah, I don't like to reinvent the wheel. So, what I would probably recommend there to other founders would be to look at companies who might be in your space, kind of similar. And if they're getting government funding, what agencies are they getting funded by? And ideally try to figure out even more specifically who is involved. Sometimes those people move around between the agencies, but ideally you can figure out who was the project manager. Government generally has pretty good transparency on a lot of things. So if there are press releases and there's somebody who, it says like ARPA-E program manager of this project is such and such, try to find that person. If you're in Washington and that's where they're based, see if you can set up a meeting with that one person and figure out what is it that's coming down the pike next year that you're excited about? What trends do you see? And not as much like, you've probably heard this before, like the idea of if you're looking for funding, you can ask for advice. But if you're looking for advice, ask for funding, I guess. So like if you're looking for funding there, I wouldn't necessarily go in pitching your story initially, but just try to understand what are they looking to fund ultimately.
Yeah. And then just a couple other questions. Timeline, it sounds fairly slow and pretty long documentation application process, right? What's sort of an average timeline between finding and applying for the grant and getting money in your bank?
Yeah, it depends a lot on the program. Some of them, I think to their credit, a lot of them have been working hard to shorten that timeline. And we have had recently pretty fast turnaround, I would say, like a handful of months maybe between the application, the decision, and then the contracting and the money ending up in the bank. I mean, I should actually add that sometimes it's more of a reimbursement process than like upfront cash, which can also cause cash flow problems for a cash-strapped startup. Another reason why having investors can be useful, just to float across that cash flow challenge. But yeah, sometimes it can take months. And so what I would recommend there is, the extent to which you can apply for funding from multiple agencies with applications that overlap but not entirely, because the government won't fund the same project from two different agencies. It's important to make sure that those are non-overlapping, so that they definitely don't want to be double funding the same work. That's you'll definitely get in real trouble for that. So it's important to try to apply for grants that are not overlapping in the topic, but are maybe staggered also in time to allow you to get sort of consistent funding over time.
And then how much can you really raise? Like, how much can you get in terms of grants? Maybe a question is, how much have you guys raised from grants? And also, what's sort of a typical or average check size from these government sources? Are we talking 200,000 or 2 million or somewhere in between?
I'm not current on exactly what is available now, but it does depend a lot on the stage of the technology. So early stage technologies, some agencies are more interested in that, say National Science Foundation. You can get an SBIR. It used to be 100 or 200,000. I think maybe it's up now to 250,000 for the first phase. And then in the second phase, it can be in the millions for sure. And most agencies will have a phase 2 that's above 500 or 750K. Often it's in the low millions. Some other agencies can be in the millions off the bat, but typically that requires a slightly more advanced technology readiness level. Or you're setting up collaborations. A lot of the agencies would like to fund, a startup working with a big corporate that might be involved in the commercialization, and then on the other side, maybe a university lab or a national lab, like here in Lawrence Berkeley National Lab or Lawrence Livermore or something like that. Occasionally, those collaborations are really what they're looking for, and the projects that they would like to fund involve bringing expertise and technologies from that national lab into the private sector through collaborations with startups and corporates.
And then last question, I think, is there usually an obligation, like just, simple example, like if you're getting a grant from Department of Defense, and then you have to sell to them your commercialized product at discounted rates? I mean, there are kind of not strings, but obligations attached to these grants usually, or how does that part work?
I mean, the government would be a terrific customer. They buy many things in very large quantities. They do not require, as far as I know, any special treatment or discounts, except under extreme circumstances. If you're making 100,000 tons of a product that, in wartime, they may want to take a big fraction of that for a wartime effort. I think there are IP considerations. The government can ask for what's called march-in rights on IP. But to my understanding, I'm not an expert on this, but to my understanding, that has been used extremely rarely. So, in other words, if the government funds some work that results in, say, a patent filing, I know that we are obligated to put at the beginning of our patent, this work was funded by the government through this department and this grant number. And the government has certain rights to this invention. But to my understanding, that has been used very, very rarely.
Yeah, and maybe my question is a little off target. I mean, I think of like strategic investors, corporate VCs. Strategic investors often have strings attached, right? They're, in terms of what you can do, or they want certain rights. I guess, is that common with government grants, or it's more, they're trying to foster development of certain industries, and here's not free money, but kind of like free money, close as you can get to free money. Yeah.
Yeah, I think the word we usually like to lean on is non-dilutive. It's not free, but it is non-dilutive.
Yeah, exactly.
Yeah. So I think, to the credit of the US government, there are not many strings attached. They see the benefit of sparking the industry as a private enterprise, and having, at least in our case, having the ability to manufacture chemicals and materials here in the US as a strategic goal of national security, for example. And if we become, as a country, world leaders in sustainable technologies, that's a technology we can export. And that creates value here in the US beyond the national security and supply chain security aspect. It creates an economic value. And I think the government tends to recognize that, especially increasingly recently. Industrial policy in the US, I think, has been very supportive of trying to help companies build up these new technologies going into the energy transition, and how that's going to trickle throughout more than just the energy sector and mobility sector, but also chemicals and materials and other industries.
Okay, good. Let's move on here. Unless you have any other tips or advice for grants, for science startups doing grants. Anything else we haven't covered?
No, nothing else comes to mind. Yeah.
Okay, fair enough. We went into Y Combinator. Were you an outlier in Y Combinator? I know they've really broadened what they're letting into their accelerator program these days. Or, were you an outlier given what you're doing, or were there some other science startups in there?
There were other science startups. We were definitely on the early side for biotech. I mean, we went through that in the winter of 2015. And, being an outlier, it had pluses and minuses. I think it's, at first, the playbook that the YC partners thought about handing us and guiding us with didn't initially seem like it fit. But the more that we were there and the more that we interacted with other founders, I think the more we found a lot of inspiration and strategy that was actually going to translate really well to what we were doing. And it just took a little while to overcome the mismatch of their heuristics with what we were actually doing. And yeah, it ended up being, we were outliers, we were oddballs, but I think it's an environment in which there's so much recognition that being an outlier positions you in a place to find opportunities that others aren't seeing. It is about as far away from a conservative chemical company mindset, so to speak, as you might find. There's so much excitement about innovation that it really was not an issue there.
Interesting. It's been a few years, but are there one or two big lessons learned or takeaways from your time at YC, like things that kind of stuck with you? And if so, what are they?
Well, the mantra is make something that people want. And in our case, we are looking at making more sustainable chemicals and trying to get them to cost parity. And that is definitely something that people want, that companies in the space want. And the how do we get there is the part that's challenging. I mean, I was at a conference in Canada a few months ago where I was like, let's take a poll. How many people here are excited about going to the supermarket and buying all the things they want to buy? They're more sustainable now, so they cost twice as much. I'm like, not that many people are that excited about that. But if you say to everybody, hey, if you could go to the store and buy all the same products and they're more sustainable and they cost the same amount and you don't even really notice, okay, who's buying the sustainable products then? And everybody raises their hand. So the cost angle there is really critical. And we hear that over and over again. And it's something that, again, we took from our time at LS9, our previous company that we were at. And we just try to incorporate that into all of our thinking. And that aligns really well with what we learned at YC. And I think the other thing that's sort of not obvious about that experience is how valuable the founder ecosystem really is, and how much people are willing to help each other and lean on each other. Relevant to fundraising, for example, if you find another company that went through YC that even has any similarities to you, you send them an email, you call them up. Almost every time I've ever tried that, people get on the phone with you for 15 or 30 minutes, offer to make introductions, try to help you think through who might be the right people to approach. And it just, it's an environment where people are really trying to help each other in a really productive and helpful way.
Yeah, no, it's pretty amazing what they've built in the network, which seems really to be the value. All right, we're running a little bit short on time, but I want to jump to your most recent round. So talk about the most recent round. Is, if I'm reading the press release, it's a $10 million seed round. Maybe tell us a quick story on how you put this round together, how you found investors looking for deals in this space. It's kind of niche, right? So how do you identify the right investors? How do you get in touch with them? Any interesting anecdotes or stories from putting this round together? Go.
I think you hit on the most important thing, which is finding investors who understand what kind of company we're trying to build and why it's important and who's going to care. It's not likely that we are going to go to walk into the front door of a venture capital firm that mostly invests in software as a service and convince them to invest in renewable chemicals. There's very little convincing that ends up happening. It's more of like, as a friend of mine said to me, it's more of like a search function. And so, that's sort of a mixed bag, because there are things you can do to narrow down the search function, but sometimes you just got to go on a lot of first dates to try to meet the right people. So I looked at investors in all the companies in our space, who were the most similar to us, what investors did they bring on at the stage that was appropriate for where we are, called up a bunch of other founders. Some of them would just share Google Sheets of investors that they talked to and their candid impressions of them, which was super helpful. There are more public databases in our space. So, for example, there's a conference that is put on virtually in the fall. I think it's in September, by the venture firm SOSV, with a big emphasis on sustainability. And all of the folks who sign up for that put their names into a database and fill out a questionnaire with a lot of incredible information about what do they invest in, what check sizes do they write, what stage do they come in at, what areas of sustainability are they specifically interested in. Some only invest in battery technologies or EVs or drones and stuff like that. Some are only these days, especially, only interested in like AI for sustainability, right? That's like a hot thing right now. But if you can find the investors who are looking specifically for circular economy, or at least in our case, those were the folks that I would reach out to, and those were much more productive conversation. There was less convincing that needed to happen on why it was important, and more describing what was our value proposition, who were going to be our customers, what had we built, and what were the technology and market risks to bringing that into the marketplace.
Yeah, really interesting. How did you, if you remember, how big was your funnel size, top of the funnel, and then maybe bring us to the conclusion here of who ended up investing, and any other details about the round?
I'd say the funnel probably started out over 100, 120 maybe, sending out lots of initial emails and trying to meet people at conferences, and then ended up in the teens of groups that were going into the data room and really trying to understand the details of our techno-economic model and our carbon footprint calculations. We ended up with, so our lead investor is a firm called First Bite Ventures, and their managing partner, Veronica Breckenridge, now has invested in a handful of companies in this space, and she is bringing a really interesting and unique perspective to the renewable chemicals and materials space, because her background was in manufacturing at companies like Apple and Motorola and Tesla. So she looked at the biomanufacturing space and said, this is an area where that kind of experience can create a huge amount of value. And she cares a lot about sustainability angle. So bringing her on made a lot of sense for us. And we've learned a huge amount working with her about how to think about bringing the company into the commercialization phase, which is really where we're shifting our focus now as we're starting to scale up and talking to partners about how to bring it to market.
Yeah, awesome. Did you get in touch with her with a warm intro, cold outreach, run into her at SOSV conference or something else?
We've been in touch with her for a while, actually. I think probably, I'm guessing it's a theme on your show that there's a personal connection that has to be forged in order to have a successful fundraise. It's rare that you meet somebody online, have a couple of Zoom calls, and they write you a multi-million-dollar check, right? So getting to know someone personally, I think, is really valuable. And we gotten to know Veronica, I think, initially at a conference. I think it was SynBio Beta, a conference that's here in the Bay Area every year. And we kept in touch, and we updated her every 6 months or so. How are things going? What progress we're making? How are we doing on the technology? How are we doing on the commercial side? So that she could see that we were building momentum. The team was growing. There was a demand for what we were trying to build. And we were building trust. I mean, honestly, just to put that out there, you start to learn, like, hey, this is somebody I could really work with. It's a long-term relationship, right? I mean, especially in our industry, it's not the kind of thing where you're going to build a website and sell it to Google in a year. It's just not the kind of structure that we have. So we're looking for people who understand the business, understand the industry, and can see the huge amount of value that would be created and are willing to put in the work to help us get there. And it is a long-term relationship. So becoming comfortable with that over time is really important.
Yeah, really good. All right, any last tips for fellow biochemicals founders or hard science founders maybe that are following your footsteps but are a few years behind what you're doing? Any other tips for raising capital that you haven't shared with us? Any advice you'd give your younger self about raising capital if you could do it all over again?
Yeah, I think the main thing I would say there is, if you've never done it before, especially, the math is pretty rough, right? You asked me what was the size of the funnel. It's like 100 people to start with. You end up with a handful of folks who come in to invest at the end, maybe 3 to 5, which means that you're hearing no like 95% of the time.
Yep.
Right. And just psychologically, no matter how tough you think you are, that's just not an easy place to live during a fundraise where you're being optimistic and you're painting this vision of the future that you're going to change the world in these ways. And so hearing people tell you that they're not interested, it's easy to take that to heart and think, am I doing something wrong? Do I suck at this, or is our company doomed to fail? But that's just the nature of the math. And so what I would tell people, what I would tell my younger self is, it won't hurt less when you hear no, but just understand that tomorrow you wake up, it's a new day, and you might be meeting the person who is your lead investor today. So just you gotta stand up, wipe that off, and get back in the game. And that's just par for the course. Like almost nobody talks to 100 investors and gets 100 yeses. So just prepare yourself for that at the beginning and realize that's where you're going.
Yeah, totally. That 5% conversion rate or 95% rejection rate, I say that all the time. We do a funding hacks class. I use that exact math
yeah.
in that class. That feels pretty consistent, except for extreme outliers of startups who, was the CTO at Facebook or something, or, just some extreme outlier. So that's good. All right. Very good. Anything else, or have we covered it all pretty much?
Yeah, I mean, I think we've covered a fair amount. Yeah, unless there's anything else you want to go over.
No, that's good. Actually, I had one last question. If you had to predict today, how much do you think you'll raise over the life cycle? And I'm just more curious than anything else, like, of a business doing what you're doing, that, like you're saying, that you've got to create a sustainable chemicals, but also at cost parity. So have you done a 30-year financial model that shows you're going to have to raise X amount? Like, any guesses?
The next couple rounds are easier to predict than being 30 years out. Looking at the success stories in our space, they're generally not the companies that went out and raised $1 billion on their own balance sheet to build a chemical plant and operate that as their first foray into commercialization. On the other hand, a purely licensing scheme is tricky because it's tough to go out and license a technology before you've actually proven it somewhere at scale. So those are sort of the endpoints. In the middle is the strategy of using joint ventures with other groups in the chemical industry, and we've seen that be more successful. That means that we will not need to raise $1 billion to build our own plants, but we'll be able to cobble that together with companies that are already in the value chain for the chemicals and materials and the end uses that those products get consumed by regular customers.
Gotcha. Yeah.
So, as a business model, we're not setting ourselves up to have to raise huge amounts of money. We need to raise enough to prove that it works at scale, especially for the first product, and then leverage that into the future to develop the second, third, and fourth plants. And ultimately, once it's a cash flow positive company, then the kind of financing that you can get to build future plants changes significantly because you can do more like project finance.
Yeah, interesting. Cool. If people want to learn more, any call to action, anything you want to plug, if people, jobs, anything really, if people want to learn more, where should we point them?
Yeah, our website is imicrobes.com. You can also find us on LinkedIn. I would just ask people to think carefully about their buying choices and realize that sustainability is very important. We are entering a phase of the climate crisis that personally I'm unnerved by, and the amount of time that it will take for some of these industries to change is a long time, but the price signals that we could send them as consumers, they will recognize on the early side. So if there are things that you can shift some of your buying power to more sustainable products, companies will notice and they will start to invest more so that in the future we'll be able to have these products at cost parity. But today is the time to actually start thinking about doing that. And you can see in the electric vehicles and the solar panel industry, we are moving towards a world where we can have all the great things that we want at lower cost and with higher performance. And for us to get there with actual material goods is going to require some new technology and some scaling up and development. And it's still a few years away before that is everywhere in our lives. But the extent to which you can support that type of industry and that kind of buying with a few purchases here and there, just thank everybody in advance for trying to help us get there.
Yeah, very good. I like that. Good way to conclude. Thank you, Noah. I appreciate it. Keep doing what you're doing. Help us solve these big problems. And we'll try and do our part. Listeners, do your part.
Great. Well, thanks for the opportunity to chat with you. It was a fun conversation. I appreciate it.
All right. Thank you very much. Over and out. Thank you.